Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. We got a lot to talk about. The stream's about integrating Bookmap order flow tools with auction market theory, using the volume profiles of chassis in the intraday developing time frame. It's based on structured trades. These are available to all of you at no cost in the Bookmap Discard Trader Lab community. There's a link in the bottom of YouTube if you're interested. This is about the business of trading. Trader Lab's a group of like-minded traders who come together to leverage their collective experience. There isn't just one way to trade or even a right way to trade. The idea or the business of trading is that it is a metrics-driven business, and we need to treat it as a business. It's not a video game. And the more difficult aspect of this, and in fact, I believe anyone, and it's a personal belief, anyone comes to Trader Lab can learn how to trade if they do the work. The issue that will take you out of this business is the psychology that's involved in it, pushing back against primal wiring. We are actually in an alien environment. And you may or may not understand what I'm speaking about, but in the Trader Lab, we talk about it all the time. We're wired as earthlings. But when you're in a gaming environment, you're in a 100% random environment 100% of the time, and we are wired to avoid that. That means uncertainty. It means risk. And our primal wiring, which has contributed to survival of the species, avoid the apex predator. We are responding to the stimulus of uncertainty to avoid that predator. And in spite of our consciousness, which is built on top of that system of protection and primal wiring, we cannot supersede it by intent. And if that's what's happening to you, it happens to all of us. How can you manage that, and how can you overcome the greatest obstacle to sustainability, which is yourself? Come to Trader Lab. You might get some answers to those questions as well as a lot more. And remember, there's no cost for this, but like everything, you have to do the work and maybe change your beliefs as far as what this business is. Most of us have what I consider a defective belief, and we try to bend trading to fit what we believe it is. How about this? Consider this. Suppose you're trying to bend trading to fit your psychological needs when trading is not aligned with those. Instead, you have to bend yourself to operate in a random trading environment. Give that some thought. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to try to go as quickly as possible. There's a lot of trades that's set up today. And I do suggest that if you are interested in what you see here, that you actually visit Trader Lab. This is based on auction market theory. This is how the market works. It's a price discovery mechanism. If the price gets too high, you go to the store. By the way, this is shopping. Let's keep it to what it really is. And a price is too high, and that's based on the shoppers, which are the other traders in our environment. If it's too high, they won't pay it, and the prices are going to get lowered to find a buyer. If the high volume areas, which are retail prices, and this happens in all fractals or time frames, if you will, a higher time frame down to micro, which I discuss here, it is a generic process of price discovery. So if we're day traders, we are trading rotations inside rotations, and based on our plan, we are trying to figure out, or the traders are, and us, what's too high, what's too low, and what's fair. And if a price becomes unfair, we leave the store. The way we see the representation is the volume profile. The time frame is the rotations that you trade. Some traders are going to be long, short, and spinning around, and if they have an edge, that's great. Other traders are going to attempt to align with the dominant side and use counter rotations for continuation trades, assuming the context or the condition of the market supports it. The problem most of us have in our development is thinking it's one size fits all. The market's unique every moment, and it can go from directional into rotational, and the plan that works in a, quote, trending market will get you run over and create outsized losses in a rotational market. And during the day, it can change. So that's why a generic plug and play approach, at least in my experience, and it's going on 47 years of this professionally and out here with you, it doesn't work. I can tell you I spent years trying to get it to work, and I think I could have got it to work consistently, but I couldn't. And it took me a long time to wake up. And it took me a long time because when I started this trading, I was an off-floor trader, and there weren't too many of them walking around. This is back in 1980. So I didn't have anything to reference. Now, you have no excuse. I do. So I spent years. You don't have to unless you choose to. So Bookmap is the order flow tool. And this gives us the ability to look inside and get into the microstructure. It creates the potential for edge. Now, the PDFs I share, there's 60 of them. This is not plug and play. These are just examples. I'm not a vendor. There's no specific course. That's why we have a community of traders to leverage, because there's just too much to do. Data mining, looking to improve, mutual support. This is the higher time frame. I'm going to go very quickly. So this is going to potentially be a blur. So watch it again. Watch it over the weekend if you find this interesting. Now, let me describe what you're looking at here. This is a profile. This is called a micro composite. All it is the volume and putting RTH days together. And what I do, and everybody does this differently, so there's nothing dogmatic in trading, like it's only one way. It can be any way you want it to be. This is a language of participant behavior. So the idea of this is to read the levels that are material. And what I do, and it's just me, and I'm always going to say, I'm not going to say this is the best way to do anything. I truly have no idea. It's a language. And what you need to be doing is trying to find what speaks to you. So let's look at this. Is everybody tracking? How are we doing in YouTube? Everybody conscious? Did you pass out? YouTube, I always worry about YouTube. I think they do pass out. So higher time frame, what I do is I take the swing high and the swing low. And that's all I'm interested in, because to me, and I'm going to just give you some rationalization, this is the last auction, high to low, low to wherever. Now, let's look at this. Now, we all know this was, I think, this is last Friday. And you notice, and here's another little element. The market goes up to go down. The market goes down to go up. The market goes down to go, and we blow out the longs, goes down, find an excess to go up. So on this day right here, the high, the high volume is around 53.25. We have a gap, big gap in here. We have sell stops here, sell stops here. Now I want to take you a little further. This right here, actually here, this one. This is what I call it's a high volume node. And what it is this was a retail price on this day for the whole area. And we started moving away. And as we're moving away, this is a language. It's saying this price is too high. Yesterday, we came up and we checked this price, too high. So now nobody knows, right? As far as we know, we're going to the moon and everything is wonderful. What else do we know? We have a fundamental event, the government shutdown. And there's an old saying in trading. Trading 47 years, you get to say, you know a lot of old saying, and that is buy the rumor, sell the fact. Now, that's not the reason to get short. It's a reason to think about longs in here who are anticipating something might cash out. If the market goes up to go down, then we might liquidate. And if we liquidate, then we can take the stops here, the stops here, the stops here, and the next target, extended target's 53. Not a recommendation, clueless. We also have 87 as another target, 68, and fill the gap. So, and this was pointed out by Van in Trader Lab, and thanks Van for mentioning that that we have a gap. So we can take all these longs out, and all these stops are in this gap. And what was the last retail price from these 2 days? It's right there, 53, high volume. Remember, I'm not paying that. Yeah, but it's on sale, retail. And if we gap away from it, then this was the last fair price. And if we come down and fill the gap, we got 53. That's the logic anyway. Now, let's go a little further. I'm going to show you something that might be hard to see. This is a volume profile, and I apologize that it's not clear because I have no space. Let's look at some information. These orange lines are called volume points of control. And this one's from way over here. But last time we were up here, what the market tends to do is come back and check retail pricing. Remember, shopping. Is this too high? I don't know. Well, this day was longs, if you remember. It was longs. And this was the target. We missed it by a little bit. All right. Yesterday, we opened, we checked this, and we come below it. And we rotate down. So it was shorts yesterday. And our target yesterday, if you look at yesterday's stream, was down in here. And that's the low of the day. Now, the fact it's the low of the day, this is the auction. It helps us see levels. There's no precision in this thing. It's just the way it is. By the way, my 55, 53 targets are coming up. Amazing. It is amazing because it's random. And I'll tell you about the trades, of course, today. But here's what's important. Now, I'm going to go a little further. This is kind of what got me thinking, the possibilities, of course. This is yesterday's retail price. And this area here is called a value area, right above this box. Very important. 70% of the volume took place in here. And the retail price is there. So this is an accepted price. Now, I know you're going, well, it's accepted. Why are we going down? Because the participants decided that this is too high. That's too high, that's too high, and this is the fair area. Well, we opened down here. What does it say? This is the language. Well, yesterday's low is here, gap. This is the fair area under it. That was the retail price. See you later. What does that suggest? Now, why might we go lower? Well, sellers, profit taking, but where are the stops? Here, under yesterday's low. Wait a minute. Don't you like it when it does something that you don't want it to do? Under here and here. This is a poorly auctioned area because of the urgency. If it's poorly auctioned, in other words, when the market is auctioned, it rotates. It's too high, too low, retail. When it rips, it's not auctioned. The market needs to come back in these areas. Well, we did that yesterday. That's why this was a target. Today, we opened below it. We're rejecting everything above us and south of the border. What's down here? Poorly auctioned area. And I can't get any lower because I couldn't fit the chart on the screen. But you get the idea, maybe, don't you? So the higher time frame is coming from this. Then I kind of start going down, if you will, in time frame to the structure. This is what structured trading is. Now, you're going to look at this and go, I really like my indicators. They're really fun. I know. Grab your context grid sheet. So we know the ETH, the overnight, the ETH low is here. And what else do we know? Let's go a little further. The RTH open is under yesterday's low. We call that a gap, right? What else do we know? Let's come back. The overnight volume point of control, this is the ETH, the last auction, is above us. Overnight mid is above us. Yesterday's value area low, remember I said 70% of the volume, above us. So we're out of value, out of balance, gap out of range, looking nasty. Yesterday's retail price is here. I'm not paying that, really. And the ETH high is up here. And A variable high volume node, 95. Let's see if I can show you that on the higher time frame. And if you're saying hurry up, I'm going to say slow down. Where's 95? I think it's around here. Okay? 95. ETH high. Let me go a little further. And yesterday's high, I think, was here. So is that correct, guys? Just confirm. Is 95-ish yesterday's high? Could somebody in Trader Lab give me a quick response to that?
Yes, fires at 6,787.
92.75. 92.75. Yesterday's high. Let's come back to the auction. ETH high at yesterday's high. Why can't we take that out? Let's just look simply at the language. I'm not paying that. Too high. Now, yesterday's volume point of control, retail price. I'm out of here. ETH volume point of control, new retail price. So, too low, too high, and then we start going down the financial food chain. Now, grab your context grid sheet. Again, if this is too much, this isn't for you. But let me tell you what this is. This is how traders prepare because the market is speaking. I don't use any indicators. I found they were the problem. I'm not saying you can't use them, but they're not the solution. They're the problem because they have random winners. So I had to do something different. It took me a long time to change because I believed I could, because I had random winners that if I just got these indicators right, the right mix, the right tweaking, the right time frames, that it would all work out. And I'd have my ATM in the basement. So what are we doing? Grid sheets out, Trader Lab. We're opening out of range in a gap. There's the RTH open. There's yesterday's low. So that's a gap. We're opening near the ETH low. It doesn't look to me like this thing is running away. And we're opening out of value, out of range, below the last auction, which was here. So is the market responsive? What does it mean, by the way? The market is out of balance. That means that we are rejecting what's above us. Value area and the ETH volume point of control, and we're outside of the range. Big deal. Two possibilities. You're going to like this. Buyers think this is a heck of a deal. All we do is take some stops out, and then we come back across, and it's happy days are here again. Or because you're in Trader Lab, you know the market is long, and if the market is long, what does the market do? It goes up to go down because there's sellers trailing under the market, right? Anytime you see a rotation, there's stops on the other side in all time frames. So if we know the market is long, then what? Do you want to get long? Me? Not so much. So, but I don't know, right? So is the market responsive? Do I get the bargain hunters? Yes or no? The answer, no. What am I supposed to do according to Trader Lab grid sheet? Trade in the direction of the imbalance. What does it mean? The market has rejected prior interpretation of value. Why? A break from the prior day's range represents a break from balance or value, representing position trader activity, and we usually want to trade in the direction of the imbalance unless it's responsive. Where are the buyers? I don't know. So we want to trade short. Now let's look. How do we do this, you say? So so now you know the lay of the land. Okay? Let's see the first trade. Now, I'm going to show you trades. Some of these are advanced, and I'm going to suggest nobody ought to do this. Because if you start out with FOMO, you're on your way out of the business. If you don't believe me, ask everybody else who's a statistic and has failed in the business. This is not a video game. This is a strategic endeavor. I do this stream because I have, you might say, a soft spot for traders like me. Except I spent years because I didn't understand. I was trying to mold trading to my comfort, and that is certainty, confirmation, Squeeze the risk out. I was intentionally squeezing the risk out, but I never understood why I made that decision. It just made sense to me. And I had winning trades. That was the other dilemma. How do I get more winning trades? Gamblers have winning hands. Right? Well, I didn't understand this was gaming. I thought it was just tweaking, tuning, indicators, more tuning, more adjustment, built trading systems to do it for me, got more complicated. I thought the secret was in the complexity. Well, this is the opposite. The secret, if you will, is not a secret. It's in the simplicity. So let's look at the first trades. Now, these are aggressive. This is an isolated trade, but it is a microcosm of what I do in different time frames. Now, remember the condition of the market. Now, there's a couple possibilities. We open lower and we get short covering. We open lower and get responsive buying. So I have to be conscious that I have a gap here, and I can vary. And there's a high probability. Let me give you some statistics. High probability to the upside. That there's an 80% probability I get to the overnight volume point of control. It's above us. There's a 72% probability I get to the ETH low. That's below us. I like that. Getting to the previous higher low is 68%. Getting to the previous low is 68%. I am concerned about filling the gap. Not unusual, right? Okay, so let's look at the first trade. Now, what I'm going to show you, I want to stress, is not where anybody should trade until they have other trades nailed down and an edge with other trades I've shared. And this is very difficult for traders to restrain themselves because they don't understand FOMO and that they're choosing to let FOMO take them out of the business. If you knew it was a choice, what choice would you make? Or would that primal wiring in the chemicals that are released in your brain, yes, those chemicals, would that make you respond to the chemicals over what you know is the right thing to do? See? And the answer is most developing retail traders let the chemicals. And by the way, there's ways to get control, but it's going to be the hardest part. So this is the retail price. This is called developing volume point of control. It starts at 0 at RTH open. This is 5 seconds right here. So you have to know what you're doing to trade this. Let me show it to you. So right here, I see some buyers and I break low. This is my retail price, developing volume point of control. And all it's doing, and this is for the whole day or the RTH, it's measuring volume. There's no volume here, so it just starts where it starts. And as the volume comes in, it's going to start shifting around. And it's very sensitive on the open. What it's doing is it's telling us the volume. What is the shopping experience? Too high? I'm not paying that. It's on sale. Now, who knows, right? I don't know. Do you? I'm clueless, but not ignorant. So I know this is too high. It's right there. And I know now this is the new retail price. So now I go down. I see my sellers. Now I'm in a gap and I'm going, am I going to get my responsive buying? This is resistance right here. Follow. And do not ever trade this. And I mean that if you were sitting on a trade desk with me, like when I used to have traders on the desk with me and I would train and coach them, I would say, this is how you learn to read it. It's like speed reading. It forces you to interpret foreign language, but you don't trade it because you're not competent. But if you try, you'll probably get out, you'll be out of the business because you lack discipline and you're responding to FOMO from day number one. This is too high. This is the retail price. This is too low. Notice what's going on here. Do you want to trade this thing? Watch. If this is too high and this is too high, right here, I found too low and I'm looking, and this is my opening swing high. We have to label that. I always say, when you're on the open, it's a high risk place to trade and you have no reason to have to trade. You don't need to do anything, right? Unless you have an edge in this thing. And I take a lot of stops here. In other words, I'll take more stops in this because I have no structure. So I'm just mentioning it to you because my plan allows me to take these stops. Too high, too low, support, right? So what do I know? Resistance, I'm not paying that. I don't know. Maybe this is too low and I go there. No, I don't. I break low. Too high, too high. Now what? Too low. Do I come across? Don't know. Do you? Opening swing high. What about the sellers in this leg? What's in here? Buy stops. All right. Good chance to come out, fill the gap. This is what I'm thinking. 67% probability to go there, right? Why wouldn't I think that? That's why I have to wait. Now let's look at the language. Support, resistance, resistance, break low, buyers, buyers. What's going on here? Buyers. Where's my buyers? Absorption, don't know. Buyers, support, right here, support, resistance, break low, short. Stop out here because I'm anticipating the pick of the opening swing. So it's a high risk trade for me. This is my scale. Okay, first trade. Now I'm just sharing it with you. It doesn't mean anything, you know. But I'd like to show you the open because it's a microcosm of what we're going to do in higher time frames. This is auction market theory. All I'm doing is shopping. You go to the store, you're already trading. You're just doing it in a slow time frame. You won't buy something that's too high or overpriced. If you perceive it's on sale, you'll throw 3 in the cart. But if the retail price, where the high volume is now, is too high, and you won't pay it anymore, you're going to get in the car and leave the store. Simple, isn't it? And then what? Now there's more volume here. What is that? The retail price. What's the last retail price that was too high? It's there. This one's now too low. Let's watch. And why do I anticipate profit taking? There's absorption. See the big down volume? My buyers are absorbing. Sorry about that. Right here. Is this a long? No. Why? I'm not paying that, right? Sweep. What is this? You're in Trader Lab. It is a potential short. And if you took this one, you would take a stop. I take stops, by the way. Got to get over it. We come up here, opening swing high. Now here, I'm thinking it's going to get taken out. And this is my opening swing, you know. So right here, I'm looking for it to go. Pull back. Too low. Remember, where's too high? It was here. See? So right here, I'm looking for the gap, okay? Breakdown, absorption, surprised. I'm going to show you micro. Now, buyers are here. Sellers are here. This is absorption. No clue. You know, opening swing high. I figure, you know, we're out of here. 3 minutes in. Break low. Resistance. Possible short. Back to here, but primarily here. So this is the scale, and then looking for it to continue. Here, scale. This is my support. Let me label this thing. Now, you're looking at this probably going, how does he know? I don't know anything. I just know what the participants say. So if I'm a shopper, what do I know? Well, I don't know it wasn't going to, you know, keep going. But when I see the sellers, I can sell this thing. I can sell it there if I know what I'm looking for. If I don't know, I can sell the retracement. Let's look at microstructure. I'm going to take you down a little bit in time frame as you guys think of it. This is mean reversion. This is, to me, the primary element of how the market works. The market is a pricing mechanism. But when we think of time frames, now there's no clock here, so I don't use time here. Everything else above this is time-based. And, RTH, end of day, or ETH, end of session. Those are isolated. But this is happening right here, right now. How long does it take? And this is where order flow comes in. How long does it take for the participants to vote on pricing? Well, it's going to the moon right here until, and why did it go up here? There's buyers right here. You see them? Because it's going up. I think we can figure that out. And why did it go down? There's sellers here. Do I know this? No. I see the buyers. Why didn't it go up? I won't know until I break below the buyers that were here. Now, I see a seller here, and it could just as well, it could do anything. It breaks below the buyers. This is a trigger. Now, resistance is there, and let me show you what it looks like in a micro. This little high volume node that's sticking out is like your volume point of control. In other words, it's the retail price. Now, let's go back to shopping for a moment. This is your mini mart down the street. Same thing. There's a price, and you need your tuna, but the price is too high here, but it's on sale here, micro. And the retail price is there at the high volume node. The other part is I've got from the developing daily time frame, this was too high. And it's a suspect. I don't know. Remember, I'm sitting here, I'm thinking it's going higher. As soon as I see this, I have a short. Now, I can sell it there. My resistance is going to be there. And if it takes out the high, I take a stop. Don't like those. See? And then I can go there or there. Why would I only take shorts? It doesn't mean you can't take a long, but I prefer to stay aligned with what I perceive to be the dominant side. Well, what does my grid sheet say? Trade in the direction and potential trend. Oh, shorts. From where? Wherever I can. This is a structured trade. This return to this is reversion. The return to that is reversion. The return to this is reversion. The return to that is reversion. The trend is down, right? Watch. If I break below and I watch the behavior. Where is my support? There. There. Too low, too low? I don't know. What's too high? This. Retail, too high. What's next? Break low, support. Then the next one is here. What's too high? Too high. Too high, break. Too high, break. Too high. Too high. Don't know. Do you? I don't know. What do you think? I don't know. Where to? Next, stops. Why? This is a low, 68.31. Let's come back and look at this thing here. So if we can't even get back to the range because of our gap, we're out of value. Where's the paper? Where's the stops? There, and a gap. And where's the target? 53. I don't know. 67.53. Not a recommendation. I'm clueless. Does it matter? I can be done with the trade at 68. Does it matter? No. Do I know? Absolutely not. Does it matter? No. Let's watch. Now, I'm going to take you into something more advanced. First of all, are you guys with me? No, I don't use GEX levels, NJC. I don't use them. The reason I don't use them is I'm a minimalist. I don't need them. This is, to me, a GEX level, and I know a lot of traders use them, and guys I respect use them, so if it works for you, use them. I am a minimalist. I don't want anything that creates conflict. We've all done, Fibonacci and, all this stuff. And look at Fibonacci and look at GEX levels. Now, GEX are much more meaningful than like a fib. But the fact that, or a pivot, all this stuff that we load on to create predictability. I've gone the other direction. I don't know anything. by not putting things into my head, and it's again just a personal choice. And again, it has nothing to do with you asked me what I think, so I'm telling you what I think, not what is maybe best. I want the minimum inputs. As soon as I put something in my head, it's going to create conflict because of the uncertainty. But if there's conflict, now I'm dealing with conflict. There's enough ambiguity in this, for me at least, to minimize my inputs and let the chips fall where they may. The fact there's a GEX level anywhere, what am I supposed to do with that? Because sometimes it's random, right? So I have done everything I can to eliminate, or should say remove random inputs. The market's random. So advanced. Now let's go to advanced concept. Not a recommendation. This is just part of the thrill. So we're coming down. This is a sweep. The sweep suggests potential further continuation down, just something to think about. This is my last retail price. It is now, I'm under it. It can act as resistance. I'm looking at these microstructures. These are called distributions. Now you'll notice in the profile, and this is kind of the neat thing about it, this is a distribution. The retail price is there. But as I go down the financial food chain, as I like to think of it, I've got the same thing here in micro. So too high, too low, retail. I'm not paying that, right? Get in the car, leave. All right. What was support? Here. I'm below it. Too high. Where am I going? Well, let's look. Too high, too low, too high, too low. I'm not paying that. Too high, too low, too high, too low. Right here. Auction. Auction. Too high. Here. This one. Too high, too low, too high, too low. Shopping. Resistance. Retail. Fair price in this auction. Microstructure. Sellers are in control. Where are my buyers? We'll see you later. And break low. Variable high volume node. Higher time frame. Outside edge. Look what's going on in a higher time frame. Developing daily time frame. These auctions, this micro, is happening inside this. So I'm going down in time frame as you think about it. So I can see the structure. And I can follow this by what they language is. So too high, too low, I'm out of here. Too high, too low, who knows? Let's see. Notice the resistance. See where it is? Too low, too high, retail. I'm not paying that. Get in the car. Leave. Then we have our low volume here because the market ran away from this. Now it can become resistance out here. And then this is the retail price. If I break low here, this is resistance. This is an outside edge. Well, south, liquidating market, right? Now, let's look at this. Let's look. This is an outside edge, right? What happened here? I'm not paying that. Get out of here, Tom. You're out of your mind. Yeah, okay. You're right. I'm not paying that. You won't pay it. I'm not paying it. I'm just going to box this out so you can kind of see what structure looks like. Okay. So this is where the buyers were. This is where the sellers were. This was absorption. No way to know. So let's not worry about it. Break low. Sellers. I think we can say there's sellers here. And now this is resistance. Okay. And too high. So I've left the store. Down, down, down. Hit some buyers here. Icebergs. Absorption. That's what's going on here. This suggests counter rotation. You have a sweep into liquidity, different conversation, different moment in life. Took some stops out. What happens after you take stops? Often icebergs, and there is one in here, are on the other side, absorbing the liquidity. Who knows, right? Who knows? So what do I know here? Too high. But what do I know here? Watch. Now, I'm running through elements here for you, and some of these are more advanced. What do I know? This is too high. because my sellers took control. This is resistance. And now I have an order flow trigger. Break low. This becomes resistance. And if I get into this thing, my stop's got to be over here. Not a recommendation, just part of the joy. And what else is this? Let me come back a second. What is this? This is an auction. It's a, quote, distribution of volume. And if that's too high and I break down, then where's my outside edge? Where were my sellers? Weren't they there? That's a low volume node. So if I break here and test and break here and come back, I can be selling this if it's in my plan, and my stop's got to be outside behind this protection. There's the location. There's the outside edge. There's my protection. Just saying. Okay? Advanced. Don't do it. Just observe it and think about it. VPOC migration. Now, what's going on here? These are retail prices, and I call them fractals, but call them time frames. And this was support because I have icebergs. You see the liquidity. If I get under these guys, then this can act as resistance. And coming back here, let's come back and look at this little thing. It's a beautiful thing. This is an ad for me or nothing, you know. And it's not what you should do. You have to learn this. Because what I'm trading is something called reversion. And when I rotate outside, I'm coming to the, I'm not paying that. And then this is the high volume. So I look at it to come back. And there's support too, okay? So I can just trade this to get risk neutral and then put my helmet on. There's my resistance. I can short that. I have structure here. Anything you want to do, up to you. I don't know. Now, where's my resistance? Let's look here. Now, let's try another one of these things. Let's just see what might happen here. This looks familiar. Now, there's a next thing. VPOC migration. Let's talk about what that means. For the whole day so far, I'm in multiple time frames. This is the high volume. This is where, you know, so what do I know? Too high, fair, and resistance. I got resistance. This is my new retail price. If it's too high, I'm out of here. See? Where do I come? Here. Another short, if it's vetted. So, no longs for me. Now, you know, taking a long, that's up to anybody. In Trader Lab, we have traders who trade from both sides, okay? I don't. Too much work, too much brain damage. Now, when we come up and we cross here, and I've got the mid, I anticipate the following. VWAP and mid, I anticipate sellers. That's what retail traders do. I'm over at an outside edge. Remember where my resistance is. I got to pull this out here.
Sweet ES sellers at 67.90. Sweet ES sellers at 60.
By the way, I know Bookmap's been working on this to so we can have these extend automatically, but you know, feel free to drop a note to Bookmap requesting an update to their drawing tools. It might get it done a little quicker. I know it's not easy for them to do, by the way, so it's more involved with the graphic interface. So, but maybe we'll get it sooner rather than later. Okay. So here is resistance. You can see it. Now, this is a sweep. Now, we get these sweeps, and like here, a sweep suggests a counter rotation. A sweep, and here you have it. No, nothing happening. This suggests going lower. This sweep suggests going higher. Now, the joy of trading is higher to where? That's the thing I would like to know. But since I know, I don't know. I don't know. So I know right here is my retail price. I know I have resistance here. If I break high, I anticipate sellers at the mid. And if I get my sellers, I can get a counter rotation. And either we're going to come down here, or These guys get stuffed. And this is how they might get stuffed, because their buy stops are going to be here. This is mechanical retail traders. God bless them. We need them. But, you know, that's the way it goes. And where's my resistance? Up here. So I have a location here, right there, and I have a location here. This right here is problematic, and yet I'm still working the shorts, okay? Outside edge, low volume. So for me, I will not sell this. I will sell this because I want the stops to come out. Remember, think like a retail trader. Don't act like one. So what I do is, so I see this. I know I've got my shorts in this leg. I know there's a ton of buy stops over this swing and the mid. They're all stacked up, retail trader behavior. I will not sell this. Now, FOMO wants me to sell it. Oh, especially this. How many of you have gone, oh, there's the mid, I want to be sure, and then you sell this because it's getting away. That's FOMO. And then you get squeezed out. Since I've been squeezed out so many times, I wait for the pop. And then I sell the pop. And what it looks like is this. So I get short here. Now I'm looking to come across. Okay? And my stop has to go out here. Now, where were my buyers? Here. See them? So what I do, and again, I'm not saying this is anything, you know, I have no opinion. I mean, I have an opinion for me. I can't tell you what's right for you, you know. What do I know here where things changed? Well, right here was my sweep, and I have no clue, right? And I get my sellers here, and my buyers are here, and my absorption is here. Now, I don't know. I get a break high. That's a trigger. Now, again, I don't know. And where's my high volume? In here. What is this? Mean reversion. That's the mean. Now, I have no idea when it does this that it isn't going to do the Acapulco cliff dive. But this is support. And again, it's just support. Look at the change. This, sellers hit it here. There's the icebergs. And this is my mean. And the goal, of course, is to just plow through this. But I have things that say maybe trouble. This can be an exit. Am I having a problem here? One moment. Oh, thanks, Bruce. Yeah, I'm just getting a little update that they're in the process of working on it, but there's still not a scheduled release date. Thank you, Bruce, for that. This is resistance. So what I do is I'm waiting for Bookmap. It's just a real problem because of the graphical interface. So it should seem simple, but it's not. This is resistance. So I have resistance. So this is my support. So when I put a short on, I am also looking where the buyers came in. And it doesn't mean anything other than what might happen. My scale has to be ahead of this because this is where the sellers failed here. And there's my buyers again. So I get my buyers here, no clue, support here, clueless, break high. Notice the extension, trouble in River City, pull back. Support. Now, where's my resistance? Mid VWAP. Where's my mechanical sellers? Mid VWAP. What do I want to do with them? Get them stopped. Get them out. They're out here. So you have to look left. Where was the last swing? It's here. Okay? So if I know there's stops here, this is why in your trade plan, you would have a specific trade laid out. And in that plan, where you see the mid and the VWAP, you would not mechanically take it in this volatility. You have to look left. Where were the swings? Wasn't it there? If you were short, would your buy stop be there? Well, I know that. And I used to trade this. And what would happen to me? Same thing that happens to you. So what about that? Don't do it. Learn. Absorption, sellers, buy stops coming out. Who's coming out? The guys who sold the mid and the VWAP and these guys. Okay? Short. Then where? See? Scale. And I'm thinking it's going to zero. Well, not so much. Does this make some sense, guys? I hope I'm not taking too much time with this. Whoops. Just lost my trackball. How we doing? Please give a like if you're visiting in YouTube. Just giving you a sense of what you can do with this thing. Not saying it's the answer. It's going to give you a lot of questions. And trading is random, so you're not going to get anything but maybe. The best you have is maybe. The reason is it's random. So you can't get certainty. You can only get maybe. You got to solve for maybe. Maybe it'll do this. Maybe it'll do that. Maybe it won't do any of it. Maybe you'll get run over. Maybe you'll take a stop. What else is new? That's trading. You can't make it into your comfort. You're going to be always uncomfortable. I'm always uncomfortable, and I'm always fearful. Now, when I say I'm fearful, I feel the emotions, you see. I've learned to accept my fear. I've also learned that my fear is not my enemy. It's actually trying to protect me. So it's not a bad thing, you know. What else do I know? Once I get taken out of this, then I know, what do we know about the market? The market goes up to go down and goes down to go up. What else do I know? I have my opening swing high, which I think is right around here someplace, and I have the gap, 68% probability. So now it's, squeezeteria. And I get taken out, and, you know, like everybody else, my teeth chatter and I'm annoyed. And, but I've already quite well ahead, right? Now, this was really interesting right here. So I see this. This often suggests a rotation. However, I know there's stops here, and I got the gap. I cannot do anything, even though I see, because often what happens, just so you understand, if we have stops over the high of the day, if you got long, and traders in Trader Lab took longs, you know. Now, the interesting thing is, when I see a long in this condition, I am looking for continuation shorts. Other traders are going to take what I perceive to be a counter trend trade in my time frame. They will take the longs because in their time frame, it's just a long. You know, even if it's counter trend, it doesn't matter. They're trading both sides of the rotation. I'm going to tell you, I do also, but I don't talk about it because my primary objective in starting Trader Lab, it was to help traders succeed in the business. If you can't trade a primary side, you won't trade either side. You'll end up over trading. You'll do FOMO. You'll blow yourself up. You'll be out of the business. If you can't develop, see, this is about developing discipline. And instead of reacting to FOMO and the chemicals in your brain, it's becoming intentional. Stalking the trade, anticipating the trade, not making it up. In the Trader Lab, if you do the work, you would actually come to market with a plan. Now, the plan is not some complicated thing. I go over it every day. You just come in and then you adjust to whatever the participant or the auction, you know, is. So when it comes across the range, I'm getting out of my short. I'm not getting long in this configuration. In other configurations, yeah, I get long, get short, whirling dervish. Now, I'm looking for this. I'm telling you right now. Now, right here, we come up, and this is where the buy stops are. So as we come up, and you see the stops coming out here, 300, 100, going to the moon. Oh, it's terrible. These guys pull. And right here, again, 67% probability, fill the gap. And then what happens when we test yesterday's range? And I said when, because I expect it. There's a gap, there's stops. That means buyers are here. And if I come up above this, there's buyers. Same reason I won't sell the mid. There's buy stops above that. Oh, not doing anything here. I'm just watching it. Now this comes in. And this, I got to tell you, I took this and I posted it in Trader Lab. Not this right here. I looked at this. I see all these icebergs. I see the stops, and I'm going, that's exactly. I've got this level from here, and I know I got my stops. That's all I know, and I got the gap. Well, I'm going, they're going to fill the gap. What happens if they get in the range? My brain is already doing that. Here, I see the absorption. And I know I just picked. I call this a pick, stop pick. Ever have your stop over the high of the day and you get picked off and then it goes down? I don't know. Look at the change. Right here, I see this selling. And I'm going, well, that's pretty uncharacteristic. This rotation is the largest downside rotation I've had. That's interesting. And I'm below this now. And all I did was pick the stops. And now I'm going to take you somewhere where no person should go. And again, it's only after the fact that I recognize it, because I don't know. I'm still looking, I don't know. I'm clueless, not ignorant. You know why I say I'm clueless? Because it's almost like, you hear mantras and all this kind of stuff. I'm reminding myself, and it's become automatic for me, that I don't know what's going to happen. Not ignorant, but I can't predict anything. I'm not in the business of predicting. I couldn't tell you that we were going to come across the range and come up here. No clue. Clueless, not ignorant. But when it happens, I recognize it. Now let's look at microstructure. And again, I can't do anything with this. By the time I'm conscious, the train's left the station. There's my rotation. So right here, there's trouble. There's a problem here. And it's kind of a surprise. Let's look. This was a really aggressive short for me. So what do I know? I know this is too high. I know that's now too high. Look at this rotation, and I want to get short. So I'm going, wow, that's quite a rejection. So I got short in here, and my stop's above the high of the day. So that's an outsized risk. I posted that in Trader Lab. And I'm not saying anybody should take this trade. I can take this trade because I recognize it. But even here, let's look a little further. Let's come back to the structure. So this, no way to know. This is impulsive. In other words, this is aggressive. Look at this. 42, that's almost a 7 or 10, almost a 10-point rotation from the high. Why didn't I get into the gap? Big question. Don't have the answer. I'm below this. So I've rejected this little auction. I have a low volume node right there. Too high. Break. Now I have to look for a place to try to get short. I know this is really resistance now. And of course I can still come up. When I break down, I'm now going to look over here. Again, I'm getting a little more advanced. Because I don't know, But let's look at these things. Chop, chop, chop. Break low, break high. Now, don't forget, we have the gap open. This is a sell trigger. Resistance is, and it's not a sell trigger, it's a trigger. Resistance is there, break low. If I break above this microstructure, let me show you where it is, right? This is resistance. So buyers are here, sellers are here, I break. This is resistance under here, I break. The high volume is there. Now I'm getting into something, again, much more advanced. This is reversion. If I break above it, it becomes support. Okay? So I'm going up. Watch the structure. Too high. Train left the station. Teeth are shattering. Where's my volume in here? It's right there. Each one of these is an auction. So this is resistance, becomes support, becomes support. Now I take this one and I draw my volume in this one. It's here. Break high, becomes support. Up, going to wherever. Break low. That becomes resistance. If I get under this one, it can be resistance. If I get under this one, it can be resistance. Support becomes resistance. Resistance becomes support. Is everybody tracking? Is this too complex? Is this making you nutty? How are we doing in YouTube? And how about Trader Lab? Is this useful or is this just noise? I mean, it might be too, mind bending, which I understand. I'm trying to show you how you can drill down and use the structure to stay in alignment. I'm not saying, and this is hard to do because you got to train your mind to see this stuff. Because when you're, I mean, if you're not, and that's why I'm drawing these boxes for you. I just look over here and I go, because, at some point, the box is to help you narrate. And I leave them on my screen also at key locations. And I take them off and I move them around. But primarily, I'm using, as the market's moving around, it's auctioning. It's always an auction. Now, there's going to be times where the thing does the Acapulco cliff dive and it doesn't rotate. It just runs. So that's material also. But then the market, once it finishes running, it's going to balance out. That's what this kind of thing is. This is a auction. This is an auction. That is an auction. You see, it's all the same. They're Matryoshka dolls. I call it a vertical integration of time frames. Notice the resistance. Where'd it come from? Here. So resistance, break high, becomes support. Resistance becomes support. Resistance becomes support. Break through it. This becomes resistance. No clue. Support is there and there. Break under it. It becomes resistance. Break under this, which where the buyers were and where the support was from here. Don't forget, resistance becomes support. Then support becomes resistance. See? Now, could you be taking a trade here? Up to you. Me, I take trades wherever, and I have to adjust my stops. And if it doesn't fit my risk parameters, I don't have a trade or I cut size. I'm just telling you, these are things you have to know before the fact. Let's come back. Where's resistance? Retail price. So either bounce too low or break low. Keep going. Take this out. Remember, stops are now under this swing. And what was that high volume price? Wasn't it here where we had our buying? Support, break high, sweep, rotation. Is it over? Probably not. Break low. What was, and there's not, remember, there's volatility in here. So this is, going to give you indigestion. Remember where this came from. This was support. We break below it. What does it become? Does this look familiar? Resistance. So there's other trades in here too I got to show you. Now, maybe we can get to real time. Let's look at another short. Now this gets a little more funky because we're doing the Acapulco cliff dive. We know the longs are in trouble, and we know that we can fill this gap and maybe get down to 53 or not. It doesn't matter. That's all we know, right? So let's look at structure again. Remember, this was support. Now it's resistance. Same concept. So down here, let me show you this. I'm going to show you some other trades here. Now, what I'm showing you is derivative of the same process in different time frames. So right here, let's look at it. What is this? Retail price was here, right? So it's support. So what are we seeing here? Outside edge. I'm not paying that. It's on sale. Retail price. Watch. And then what about from over there? Support here. So this is what's happening? Too high. Now, with this, can't get in, right? But look at the auction. I'm not paying that. Oh, yeah? Fair. No, see you later. Leave the store. Keep an eye. What's that? Would you say that might be a short? What does this astute group of traders think of the auction? Can you do this? Can you learn it? Do you want to? Would this understanding of the market help you? It's not the Holy Grail. Stop looking for that a long time ago. How about you? You're going to take stops. You're going to have losing days. You're going to want to throw your keyboard out the window because of the emotions. You want to give up because you got to learn. And nobody has the patience to become excellent. Everybody wants plug and play, mechanical trading, get the ATM in the basement. And if you are doing that, you are already failed. I'm sorry. I have to tell you what I've observed over 47 years of trading. I've seen it so many times because I know what it is. It's FOMO. And give me more setups. Everybody's on a quest for setups or the only one thing you need. Both of those are paths to becoming a failure. And Trader Lab is about the business. And the business of trading is different than what you want it to be or what you even think it is. But it is not complicated. Remember, if you know how to shop and you can interpret what this says, language, foreign language, then you can understand what might happen, where it might happen. And here's the other part, anticipate it, not predict it. So if I see this behavior, and I know this was support, remember, out there, which gave us the rally across the range, and I get rejection, and I go, oh, they don't like that. If I come back to it, I can sell it, and then I put my stop for just right behind. Okay. Now, my stops are further away. I'm not using a shoehorn in this thing because there's buy stops here. I'm not going to put my stop here. I'm not putting my stop there. I'm putting my stop out here. And you'll notice, so that's like 5 points, 6-point stops, double what I usually run. Typically, I'm around 3 points or less, but 3-ish in the volatility. Well, with the volatility, you've got to adjust. So you either go down from minis to micros, or you lighten up on your micros, or whatever you do. Too high, short. Let's go a little further. I know. Let's go a little further. Too high, trigger. So this here, right here, it's what's happening, right? Trigger. Buyers were there. See the liquidity? Buyers are here. Trigger. This is a sweep, which suggests a counter rotation. This is where you use order flow. This gives you an edge. When I see this, I anticipate, I don't predict, again, I anticipate a check of the reversion. I always say the primary tool to trade is mean reversion. Reversion in all fractals and time frames is coming back to check the retail price. And you, as the astute shopper in this store, if this is too high, you're going to go, nah, I'm not paying that. And you're going to get in the car and you're going to drive away. That's an ad. Now, let's look some more. What do you do now? Now, for me, and I'm not saying this is a good plan, this is a gap that's still open somewhere down there. Yeah, CJ, I do put the VHV in. Well, the LVNs are automatic. IRT exports levels. I don't have them turned on now because they're going to show the current levels. But like up here is a low volume node. if I come out here, I can sell this because I'm coming out to in a different time frame. See, these are like little time frames, little auctions. You could see it right there. Too high, too low, retail. If this becomes too low, I can get that. Well, then if I come out to the other side and I know I left this, this is my outside edge. So as I approach this, I can take the same structure in a different time frame and sell it to go there. And out the bottom, so let's look at it. My outside edge is here. That's a short. Now, how do you sell this thing? Great question. Well, first of all, let's come back. What do we know? Sweep here. This retail price, I'm going to just throw a little line on here. I just want to show you something. Just a thought. Break low. Oh, I'm not paying that. All right. Now what are we doing? Oh, I don't know. Now, I'm already short, but let's assume I'm not short. I'm just here. I fell asleep, hit my head on the desk, and woke up. Now, outside edge is here. Here's what I know. In the microstructure, this is too low. In hindsight, I don't know. So I got microstructure here. So what do I have? Sellers, buyers. There's the liquidity. There's the sweep. Resistance, break low. Now, this is resistance. Let's just look at the resistance. Now, you don't have to get as crazy, you know. It's just to help you see structure. That's all I'm trying to do here today, is show you micro structure inside structure. You know, you guys think of multiple time frames. Again, there's no clock here. I'm using the participant behavior. Notice what we're doing. Chop, chop, chop. This is resistance. I don't know it's resistance. I know my sellers are here. I break here. That means too high. Where's my volume? Let's put a little line here. Here now. I've got it there, right there. From here. And I have some here. So this is too high, and now this is too high. Break low. Resistance. Support. High volume. Microstructure. Break high. Resistance. Resistance. And if I push through, then I know there's buy stops here. Clueless. And then where's my outside edge? It's going to be out here. So I can do the same thing in a higher time frame. I got to get a new trackball. I use a trackball. Very nice. Except, so now I'm outside. Remember how I talked about the stops at the mid? This still works the same way. Here's why. Down leg, buy stops. What do retail traders do? Write this down. Think like a retail trader. Don't act like one. Where's the stops? Here, here, and wherever, right? Come up here, sweep, suggest resistance, suggest downside rotation. Where's my support? It's there. Do I know? Nope. I know it's support. I don't know that it's not going to take it out. Part of the thrill. Resistance, don't know. Support. Now, I won't be drawing these lines. I'll be looking right there because I know the upside rotation came into resistance and now I rotate. And as far as I know right here, south, right? Well, that's where the buyers were. Now that's resistance. There's a sweep that gives me this. Now I got support and resistance, support, break high. This is now resistance. Uh-oh, break high. Squeezeteria, helmet. Now what? Buy sweep. And I'm looking for this area for a short, for continuation. Why? It's a liquidating market. Would I want to get long? No, not me. So right here, we come up. And again, this is the outside edge. Here, here. Short. short. Outside edge. So where's my volume in here? It's over here, right? Got to keep labeling these things. So this was too high. There's my sellers. So I have resistance here, 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 here. All those are shorts. There. So I took an ad, got scaled, got taken out of it, put it back out again. I mean, I just take, doesn't matter. I mean, I'd like to just put the trade on and get back in the Barca lounger, but trading is not that generous. Now let's look where we are here. VPOC migration. This still sets up continuation shorts. Why? There's the level. This now is the retail price. If we come outside, this is still mean reversion. And there's your sweep into the levels. There's your liquidity. And your outside edge is out here. So this is reversion. Now, being able to pick the right level, that's why in this configuration, my stops got to be far away. And I know I got the mid and the VWAP. Now, the thing is, are you willing to take a stop? If you're not going to be able to stay in the business, because it's not about being right. It's about the auction and the participant behavior. You have to be willing to pay. Think about how the casinos operate. They pay to gamblers. This is called cost of production and overhead. Now, your primal wiring is going to want you to seek certainty and avoid this pain of the saber-toothed tiger. Well, I've found out over a lot of years that this didn't work for me to be saying, well, that's there and that there. It could go there. So I'm not going to take the trade because, I only want to do the VWAP in the mid. Well, if I have a trade outside and there's no precision, I mean, it could come out here. This is a low volume node. It could come right there. And if it gets there, it's going to get these guys. I would sell this. If I get a trade here, I'm going to sell this. And there's my entry. And I don't know to sell it here. You see, I'm here with my teeth chattering just like you. But what happens? I get a sweep. I get my trigger. I pull back to an outside edge where the buyers were here. The sellers took control. The sweep is here. The absorption is here. The liquidity is here. The icebergs are here. This is order flow. Break low, trigger, then what? Entry. Stop here. Scale. Put a helmet on. Trend down. Going down here, maybe. Is that? Anyway, there we are. So that's what, if I put that trade, I take wherever it was, I would take, and I'm just showing you what I do. I'm not saying it's any good. And the other part is, you don't need to do any of it. Just learn to read it and interpret a language. Have you ever learned a foreign language or a musical instrument? What does it take to do that? Well, that's what this is. And I know we use indicators, so they will translate for us. It's Google Translate. Well, trading doesn't work that way. And it's not that you can't use indicators with this. It's that you got to get rid of the indicators to learn this. And then you put them back, or you're going to find that they actually created the problem for you. Sweep, microstructure, support, resistance here. So resistance, support. How we doing, by the way? How we doing in YouTube? Please give a like. If you're taking shorts for the day, this is YouTube, do you take mean reversion trades back up to the mean reversion? Or wait until it surpasses the mean and edge to edge back to mean and continue? I'm not sure exactly, but I'm only taking shorts today. When I see reversion coming back from the other side, it's a squeeze in my book. In other words, a counter rotation. I don't trade in this configuration any longs. Not now, not ever, never. But that's only my plan. There's other traders in Trader Lab who will be taking, whatever, both sides. If they have an edge, that's their business. That's what they do. I have an edge on the short side because of what's called context. That's my primary input. So if I see reversion up, all I'm doing is counter rotating and squeezing. Remember, there's buy stops in these legs, you see. So when I know that, so you know it, I know it. There's buy stops here. That feeds your counter rotation. I know we dropped it from here. That's where my sellers took control. If I come back, the way I kind of think of it is, if the guys that were here thought this was a great deal to sell, and it comes back, and even here, it even picks. That's why my stop doesn't go here. They will sell more. If it comes back here, sellers that didn't get in this are going to take the opportunity to get short. Then I'm going to get my microstructure now here. And buyers were there. We dropped it again. I've got resistance there, and I've got resistance at the high volume node. We've got support right there. In a down liquidating market, it's not a long. It's just an area where I might rotate from. I only have shorts. And I'm going to say, I have to say this, it's not a trade recommendation. I take stops. I get annoyed. I'm human. I make errors, not too many. I make them. In fact, Greeny, one of the traders in the Trader Lab, created something called the error cost calculator and shared it with all of us. Thanks, Greeny, for doing that. Years ago, see the behavior? See it? Years ago, I used to journal and put in, made an error, did this, did that, but I never added them up. So I don't know when it was, the year 2000 or somewhere in there. I created something for myself, an error cost calculator. So not only what were the errors, but what caused them besides me? I mean, was it 2 losses in a row? And then I skipped the next trade, which means I'm trading the last trade, not the current opportunity, because they're unique. Did I respond to FOMO because the market ran away from me? Did I take a phone call, lose focus? All that stuff. What did I do? Did I make it some trade up in the middle of nowhere? What did I do? That's all FOMO. Lack of discipline. What did that cost me? And I've talked about this in the Trader Lab, and Greeny made a utility that is free and anybody can use. I found out I was throwing over $10,000 a month out the window. I was giving it away. I wrote a check out, and I say over $10,000. I wrote a check out and put it on my monitor on top. So every time I sat down to trade, I would see it with the number. And I thought about all the months and years and what that represented. I will tell you, that helped a lot for me not doing the behaviors that were counterproductive to my sustainability. All these pieces need to be evaluated, quantified if you want to be in the business. You have to learn to manage yourself, and you cannot, in my opinion, do what most retail traders do. That is not a recipe for sustainability. You look at the statistics, you can answer the question for yourself. Are you doing what they do? Or are you prepared to say, put a stake in the ground and say, I'm going to learn this business. And I've already been working at it for X amount of time. And what I'm doing, well, even though I have winning trades, it's not sustainable. If that's you, then Trader Lab will be for you. Use the link in the bottom of YouTube if this resonates with you. Now, what I'm showing you here is advanced to be able to operate in real time. For us to process this, we have to train ourselves in higher time frames with a slower operating speed. So it's more intentional, and I trade in a higher time frame. Now, what's a higher time frame? A short from there to, get scaled and hang out. I'm okay with that. Other traders are going to go short, long. I don't even know what they do. And here's why I do this. I used to be a high volume trader, 100 trades a day. So I'm saying I've been there and done that. Instead, I went the other way. Less trades, more range. the range pays for the stops I take. So I'm not traumatized by, oh, I have to make it back. I'm confident as long as I have the structure that I can be profitable. Now, I'm not going to be profitable every day because sometimes the range isn't there, but the process I use is generic. So if I'm just trading from there to there on some days, that's fine. But on today, this is my target, 53. And the last short was near the high of the day, which you saw. So I'm just saying is that's what I do. And I would suggest when you come to Trader Lab, you're not here to be a whirling dervish or play a video game. You can, but that's entertainment. And you have to know what it is. It's gambling. And that's okay. If I go to the casino and I go with my friends and I throw a certain amount of dollars on the table, I'm going to have a good time. I'm not going to make money. If I happen to make money, I know that it's an outlier because I don't have an edge. Why would I take real money to the casino and actually think I can become a professional gambler without knowing when I have an edge? Does that make sense? So you can gamble and have a hobby, but you have to do the work if you want to build a business. I'm only repeating this because I don't want traders to fail because they don't understand what it is they need to do. This is not where you come in to Trader Lab and you hang out for 6 months and now the ATM gets moved in the basement. It just doesn't work that way. If you want to be a high level performer in any endeavor, whether it's a sports team, a surgeon, any high skilled professional, what does it take to develop that? And this is alien. So it adds another dimension of difficulty because you have to rewire how you respond to the stimulus. It's an alien environment. So you can't take what you know and bring it here. You can bring your successes, but not the process. The persistence, yes, but you're going to actually have to adjust your process and not try to build this into your external experience on planet Earth. This is an alien environment. Anyway, I hope it makes sense. I hope you got something from this. Don't forget to leave a like. If you're interested in Trader Lab, there's no cost for it. There's a link in the bottom of YouTube, and it's open to everyone. And you will not be solicited, harassed, or otherwise abused. But this is a professional community for serious traders. It's not romper room. So, it's up to you. But don't come to Trader Lab if you're looking for a quick fix. This is about the business. There is no shortcut. You just have to take it step by step, lay a good foundation, and build it from there. And the Trader Lab community is there for you. And don't forget to leave the like on the way out and support the stream so I can keep doing this for you as long as possible. And let Bookmap know that this is helpful to you. Thanks again. Look forward to seeing you tomorrow. Feel free to review this stream and also pass it along to your trading buddies who might get some benefit from it.